We're just waiting for confirmation that we're live.
Okay. Good morning, everybody. I'd just like to say thank you very much for taking time out to come here this morning for this extraordinary meeting to go over the accounts. I'd especially like to thank Gavin and Joanne from Mazars for attending here today. It's greatly appreciated, and it's creeping up to Gavin's retirement. So yeah, thank you very much for all your hard work, and it is appreciated. Apologies that you've got me sat in this seat today. The professional chair is unable to attend, so I will do my best for you, and we'll work through the agenda. But I do appreciate you coming. So first of all, we've got apologies for absence from Rachel Matheson, Dennis Mullen, Liz Ellis, and Mohammed Dalek, and Val Foster. Is there any others? Val Gibson. Is there any others from the form? Anybody else? We've had no declarations of members' interest. Is there anybody else who would like to add it for today? Yep. That's great. So we'll move on to the annual accounts. Tracy will introduce the accounts, and then we'll take questions on the accounts only to start off with. And then we'll move on to the audit after that. So over to you, Tracy.
Okay, thank you. And so the report asks members to approve the audited statement of accounts for 2024-25, which is an appendix one to the report, and also to authorise the deputy chair and the chief executive to sign off the accounts for issue, and to endorse the findings in the audit completion report and the draft auditor's annual report from Forvis Mazars LLP. Just for, I know we've got some new members that won't have been here in July, but the accounts for 24-25, we got a very detailed outturn report in July, where we went through the detail of the numbers, and they form the basis for our statutory accounts. Under normal circumstances, we would be bringing our statutory accounts much closer to that outturn presentation, but because we've had some issues with the resources in auditing, which we've discussed, we're kind of much later in the annual cycle. So I'll take you through some of the key points in the accounts themselves, and then I'll hand over to Joanne Bracken and Gavin Barker from Forvis Mazars, who will take you through their reports. So the detail of the financial statements was discussed at the Finance and Audit Group at its November meeting in some detail, and then we gave an update to that group earlier this week on the 17th of February. A surplus of £377,600 was reported to the July Authority meeting for 2024-25, and this increases our total usable reserves from £1,992,900 to £2,370,500. And this can be seen in the movement in reserves on page 28 of the statement of accounts. £1,840,500 is held in earmarked reserves to fund the future budget requirement, together with other specified reserves shown in note 9. Once these and the £30,000 in the capital receipts reserve are taken into account, the general fund balance is £500,005. The comprehensive income and expenditure statement on page 27 of the accounts shows a surplus on the provision of services of £321,400. And the difference between this and the outturn surplus of £377,600 is made up of £56,200 of adjustments between the accounting basis and the funding basis. And this is shown in note 8. And this amount increases the authority's usable reserves. The majority of these adjustments relate to depreciation and impairment costs, revenue expenditure funded by capital under statute, which I'll come back to, and capital grants. And these are essentially items shown in the comprehensive income and expenditure statement, which need to be reversed out as they don't actually hit our general fund balance. So looking at these elements on note 8 of page 45 of the accounts, The impairment item of £592,200 is mainly made up of impairment to the value of Walltown following its valuation at the 31st of March. This arises as capital additions of some 480,000 were made to the site under the ramp project, but this is not reflected in the valuation of the site, which is actually done on an existing use basis, and it looks at income streams generated from the site rather than what we've actually spent on it. Capital grants and contributions applied is 1.8 million. This includes funding from DEFRA, including £905,000 of capital income under the Farming in Protected Landscapes Scheme, or FIPL, and £226,000 of capital funding, and £658,000 from Northumberland County Council for the ramp project. There's also an amount of £905,000 under the heading Revenue Expenditure funded by capital under statute, or REFCUS. This is something that hasn't been in our previous accounts, so members might not be familiar with the term. Statutory regulations specify that certain types of expenditure, which are not technically capital, can be funded by capital grants and disclosed in the accounts against these grants. One of the types of expenditure specified is grants made to third parties for capital items. And in the financial year, we made a number of capital type grants under the FIPL scheme, and that's what's shown here. So further down in the comprehensive income and expenditure statement, there's also an upward valuation taken to the revaluation reserve of £580,200. And this is made up largely of a positive revaluation movement on Eastburn of £298,000 and the Sill of £203,000. And next we have the actuarial deficit on the pensions, assets and liabilities of 1.8 million. And this takes the total comprehensive expenditure to £948,000. This deficit relates to the movement of the funded pension fund asset from 1.8 million at March 2024 to zero at March 2025. Now, the scheme was actually an asset of 5.1 million, but the actuaries applied an asset ceiling of nil. So this couldn't be recognised at the year end, so we actually had to show a value of nil. Moving on to the balance sheet, I'll just pull out some of the bigger movements. You can see that year-on-year difference in the pension asset. There is an increase in debtors, which is mainly due to there being a number of grant debtors outstanding at the year end. You can also see that long-term borrowing has decreased by £29,000. During the year, we repaid £185,000 of our Sill PWLB loan with capital funds from DEFRA, and this resulted in a discount of £35,600. So that reduced our borrowings, but offsetting this reduction, we now have within long-term borrowing a lease liability of £194,000. And this is as a result of a new accounting standard, IFRS 16, which I think Joanne will talk about a bit more in her report, which requires us to now account for the majority of our leases on the balance sheet by creating an asset and a corresponding liability, as is detailed in section H of the report. This doesn't affect the actual payments made at all, just the way we account for them. So the key financial results, Appendix 4 to the report shows some key trends in graphical form. On the first two graphs, you can see the marked increase in gross income and expenditure in the year. Gross income increased year on year by 2.64 million, and this was largely driven by an increase in capital grants of 1.79 million, which includes capital funds from DEFRA and from Northumberland County Council for the ramp project. Revenue grants also increased as the authority secured extra funding for projects and was awarded a one-off revenue grant of £250,000 from DEFRA. Gross expenditure also increased by 2.21 million. 680,000 of this increase relates to capital spending on works funded by the ramp project and from DEFRA capital funding. And both staff costs and other revenue costs relating to externally funded projects were increased as income increased. So the increase in project and other income means that 2.92 million, at 2.92 million, our DEFRA grant still constitutes a significant part of our funding, which funds our operating expenditure. but in the 24-25 financial year, it remained below 50% of our total income, despite there being a one-off £250,000 uplift in the DEFRA grant this year, the year 24-25. So in summary, the accounts show that in 2024-25, the usable reserves increased from 1.99 million to 2.37 million, and the movement being the in-year surplus of £377,600. And these reserves represent the build-up of funds that the authority can use and form the basis of our budget plan. Within our usable reserves, 1.84 million has been allocated to earmarked reserves, leaving £500,000 in the general fund. And this is considered a sufficient but not excessive level of reserves to meet any exceptional cost pressures, to mitigate financial risks, and to provide, where possible, future investment funding. So thank you, Chair. I would be happy to take any questions on the accounts now themselves before handing over to the auditors to report on their findings.
Tracy, thank you very much. As always, a very comprehensive and professional report. Thank you for that. I'll hand over to Sue first as chair of the Finance Committee.
Thank you, Chairman. Could I assure members that the Finance and Audit Group has gone through these accounts in some detail earlier at our meeting? They seem very late. They are very late again, through no fault of our own. And I do appreciate that there'll be members around this table who were not even here during the year that the accounts relate to. And there were a couple of things I really want to draw attention to, and one is the treatment of fixed asset leases. This will result in some peculiar figures as the years go on, because although the revenue costs will be pretty well known, the value at the year end of the leases and the vehicles will change quite significant year on year. I'm not quite sure of the point of it, but it has meant extra work for them in the finance department. The other thing that increasingly concerns me is capital grants treated as revenue. Again, the management of those is much more complicated. It produces more work at the year end for Hazel and her team. So all in all, we now have a situation with audit being delayed so much that for Hazel and her team, there is, from Christmas, there's been a considerable amount of work to do. I'd like to pay tribute to the work that they have done in a short period of time, that we get such a good report. We'll come on to the audit and the good audit as well, Chairman. Yeah.
Thank you. So is there any other questions with regards to the accounts?
Just at a very gross level, one of the things that struck me with looking at the gross expenditure graph is the really significant uptick in terms of that amount of expenditure, particularly in terms of capital, obviously, and balanced by income. But I just wondered, in terms of the relationship between this and our business plan and management plan, how much of that significant uptick is caused by inflationary pressure, and how much of it is actually saying that we're doing more?
Say the majority is that we're doing more. Inflation is pressure. We have staff inflation, which is significant because most of our expenditure is staffing. And obviously then when you bring projects in, they have staffing and inflation with that. We have inflation on general costs, but the majority of the budget for all of that, the majority of the increase is because we've delivered so much physical capital work on the ground and additional revenue spend.
Yeah, great, thank you.
Yeah, so the two main things that came through in this not this financial year, but the financial year we're reporting on, was FIPL. Quite a significant amount of FIPL come through, but also the ramp for the rural area multiplier project funded from the North of Tyne Combined Authority in partnership with Northumberland Council, and that brought significant expenditure on projects. So that wasn't on meet inflationary costs, that was doing work to meet the business plan.
Thank you.
Any other questions? So we'll move on to the audit now. We'll pass over to Gavin, and I think it's Joanne doing this.
Do you want us to approve them? Shall I?
We'll do them all in block at the end, if that's okay.
Okay, right.
That's okay. I think I'll go first, just make some introductory comments. So the first thing to do is to apologise for it being so late. Audit does have considerable pressure on it, not just in our firm, but right across the sector. And we are doing this later than we would want to. And we know the pressures that it's created on your team. And for that, we apologise. But we are glad to come here a week before the VAT stop date, which is the sort of deadline for delivering this audit, and to be able to tell you that we give you a clean bill of health, and that we're going to issue an unqualified opinion, and we've got no issues to raise in relation to your value for money arrangements. We'll say more about both of those areas as we go through it. So we're really glad to be able to do that. There are a lot of audits across the country that haven't been delivered. There are audits with disclaimed opinions where the auditor doesn't give an opinion. So we're really glad to have been able to deliver, but we recognise that it's slower than we would like and it has created problems for your teams. I'd like to thank everybody that I've worked with at this authority. You are one of my favourite audits. I have a lot of audits, but you are one of my favourites. And I think the working relationship that we've had with the whole of the management team, particularly Liaison and Tracy and the sort of finance team, have been great. And we wouldn't have been able to do what we've done without that cooperation and support. The audit is an extremely rigorous process. We apply the same auditing standards to you as we would to the county councils and the sort of city councils nearby. It is a really rigorous process. And I'm sure Hazel, Tracy and the team would attest to that, given the number of questions that were asked. So that's the context. But I'm going to ask Joanne to say more about the accounts audit, and then I'll briefly go through the annual report after.
Gavin. So I'm going to talk you through our audit completion report, which summarises the findings from the audit that we just carried out for the year ending the 31st of March. So section 1 of the report is just an overall summary, which confirms that we intend it's an unqualified opinion and that our work is substantially complete. As Gavin's just mentioned, we haven't identified any significant weaknesses in your BFM arrangements. However, he will go through the value for money commentary in further detail as part of our next report. Page 6 continues that executive summary and highlights the significant matters discussed with management. The main matter this year being the introduction of that new accounting standard, IFRS 16 for leases, which Tracy's touched on. So the new standard required the authority to recognise leases with a term of over 12 months on the balance sheet for the first time, with a right of use asset for the underlying leased asset, and then a corresponding lease liability for the outstanding payments. And that was effective from the 1st of April 2024, and that was across all authorities, all of the sector. As reported in our audit strategy memorandum, the plan we brought last summer, that was assessed as an area of enhanced risk, so it just meant we put a little bit more focus, a little bit more detailed testing because it was that first year of implementation. And there's a couple of findings later in the report around that, but nothing significant in terms of that. The section also confirms that there was no significant difficulties during the audit and we've had full cooperation and management. And I just want to pause and echo Gavin's comments from an audit manager perspective, working with Hazel and Tracy and the rest of the finance team. Just want to thank them for the cooperation and assistance. It is an achievement getting an audit to this stage, so just want to thank you both for that. Section 2 of the report then just gives an update on the status of the audit. As I've already mentioned, we've substantially completed it. There's nothing outstanding other than final completion procedures. Following today's meeting, we will be in a position to sign the audit opinion and get the account signed, and then that will be the audit completed for the year. So there's nothing. Sometimes that page would have a list of things, but we're in a really good position here that there's nothing outstanding. Section 3 of the report then is page 10 onwards, just gives an update on the audit approach, noting that there's been no changes since the plan that we brought to you last summer. As you'll be aware, we work to materiality levels with an audit when carrying out our review of the financial statements. So at the planning stage, materiality was based on the prior year audited figures. Those levels were updated on receipt of the draft accounts, noting an overall headline materiality of 155,000, performance materiality of 124,000, and triviality of 5,000. So that means any errors above £5,000, we are required to report you, and that's what's included in this report. There were no material errors identified, so nothing above that 124,000. There was just a few small misstatements between that we are reporting in here, but nothing significant. I'll go through them in a little bit more detail as we go through. And just to confirm that there's been no changes to materiality during the audit based on the final statement. So those levels that we assess based on the draft are still the same at the final position. The table on page 11 of our report then sets out the significant risks that were identified as part of the audit, being management override controls, valuation of PPE, and valuation of net defined benefits. Management override controls is a significant risk on all of our audits. It's due to the nature of it. And the others, valuation of PPE and valuation of pensions, they're both classed as significant risk just due to the inherent nature of what they are. There's a lot of assumptions and judgments involved in calculating those figures. They're quite complex accounting areas, so we do put those as significant risks across the majority of our public sector audits. So there's nothing unusual there. And then also, as we mentioned, we've got IFRS 16 as enhanced. So this table on page 11 just summarises the findings, but there's more detail included in section 4, which I'll go through now. So management override of control on page 13, like I said, is a standard risk across all of our audits. We address this through consideration of any account estimates included in the accounts, testing of any journal entries, and where appropriate, consideration of any significant transactions outside the normal course of business for the authority. There doesn't tend to be many of those, but we do a lot of tests on journals and account estimates. Happy to say that our work provided the assurance required in that area with nothing else to report. Page 14 of the report then is a summary of the findings in terms of the significant risk on PPE valuations. We've concluded our work on that area and identified one non-trivial, non-material error totaling £13,782, and that just relates to the way that the revaluation movement had been accounted for. I think it had been posted to the CIS rather than the revaluation reserve, so it was just an adjustment. And we did actually test all valuations in year, so that is the actual total error, and it has been adjusted in the final account. Nothing else to report on PPE valuations, and we've gained assurance on that. Page 15 then is the pensions valuation. And again, this is a significant risk because of the high level of estimation and assumptions that were involved by the actuary in determining that figure. And we've got one matter to report following our work on that, and it comes out of the review of the letter from the auditor of the Tyne and Wear Pension Fund. So what happens is the authority is a member of the Tyne and Wear Pension Fund who are subject to their own audit. So we write to the pension fund auditor to gain assurance that the pension fund accounts are right, which in turn gives us assurance over the balances included in the authority's accounts. The pension fund auditor indicated an error, noting that data given to their actuary could be up to £52 million lower than the pension fund accounts, a difference of around 0.39%. So although 52 million sounds massive in terms of, when you think of it as a number, in terms of the pension fund, it is not a significant number at all. And what we've then done is calculated the authority's share of that, and it gives a potential shortfall of just under 82,000 in the pension fund assets within the accounts for the authority. However, this year there's another technical nuance in terms of accounting for pensions of an asset ceiling cap, which if you look at the balance sheet, the pension asset is actually disclosed as nil, and that's a result of an asset cap. So therefore, this 82,000 potential error doesn't affect your balance sheet at all, because the difference at the asset had already been capped at nil. And therefore, this is purely a disclosure error in the pensions note. I appreciate that. That probably doesn't mean a lot to anyone around this table, because it is a very highly complex accounting note. We haven't asked the authority to amend it because it is a purely disclosure error. It's below materiality, and pensions, to be honest, it's at a point in time. So we're saying it's an error that day. We could get a different report from the actuary the following day, and it will be a different number. So we've got a reported here because it is above that trivial threshold. And it's just to highlight that it's not a significant matter. You will always get these timing differences on pensions always. So it's, we've got to highlight it, but there's nothing to worry about or there's no concern. Page 16 of the report then is revenue recognition. So across all of our audit, there's a presumed risk of fraud in revenue recognition, and that will normally be considered a significant risk. However, for the authority, we've assessed the nature of revenue streams and determined that there's little incentive to manipulate revenue and opportunities are limited, and therefore we've rebutted the risk of revenue recognition. And that just means that we haven't had it as a significant risk and we've just had it at a standard level of risk for the audit. Page 17 then goes on to IFRS 16, which we previously mentioned. We've got one unadjusted misstatement relating to our testing on right of use assets, which is on the table on page 20. Simply, we identified one actual error in our sample testing of £500. So whilst that individual error we identified is £500, it's way below triviality. So as I said, we only report errors above £5,000. Because we tested on a sample basis, we have to extrapolate and estimate what the error would be across the population, and that resulted in an error of £7,000. Noting that that is an extrapolated error though. So actually, if we had have done more detailed testing, if we had have went further and carried out more work, actually what we could have quantified as that was the only error, that £500. I might have been able to reduce that, but we're saying the £7,000 was overall the worst possible estimate of what the error would be across the population. Again, the amount of work involved in doing the extra work didn't warrant the findings, so we've just left that as an unadjusted error. Happy to take questions on that. We also noted that there was some disclosure amendments. Obviously, this was a new accounting standard in the year. Therefore, we worked with Hazel and Tracy to make sure that the disclosures in the accounts met all of the requirements of the CIPFA code, which resulted in the addition of an additional note in the accounts just to provide some details to the reader and the user. Section 5 of our report then just details the adjustments which I've just spoken about. Page 22 notes a number of disclosure misstatements that have been corrected by the authority, but again, nothing significant that we need to really flag or mention here. Section 6 summarises our approach to fraud, confirms we've not identified any actual or suspected fraud resulting in material misstatement in the statements. Section 7 is just an overview of VFM, but Gavin will provide the additional detail and commentary on this in our next report, the Audit's Annual Report, just highlighting that there's no significant weaknesses. The final section of the report then is just the appendices. So Appendix A notes the internal control deficiencies. So as part of our audit, we obtained an understanding of the authority's internal control environment and control activities, and we've identified nothing that we need to report in terms of deficiencies. Appendix B is a management representation letter, and that's to be signed by Hazel following this morning's meeting and will be put on the audit file as a representation, and just provides that extra level of assurance. Appendix C is our audit report, which, as we've mentioned, is no qualified opinion and will be signed by Gavin following today's meeting. Appendix B just notes there's nothing to highlight in terms of our independence, and E is just other communications. So I appreciate there was a lot of detail in that report. There's some highly complex sort of accounting issues around pensions and IFRS 16, so we're happy to answer any questions anyone might have. But overall, it's a very clean.
You said there was a
2 seconds, sorry.
Sorry.
Thank you very much for that report. We'll go to Sue first, being the chair of the Finance and Audit, if you have anything.
Just to say that obviously it's gratifying to have such a good clean report, a tribute to the management of this authority that we have got such a good report. But to highlight now that audit is much more complex for this authority than it was many years ago when we just had the grant that the authority ran on the grant they had with a little bit of car parking income on the side, as you will have noted from Tracy's report. We now depend for the majority of our income from other income, from earned income, from grants, and from and this makes the audit much more complicated. And we are grateful to have a good audit, because there have been a number of local authorities that have got into serious difficulties with their commercial ventures. And therefore, I think it's more important than ever that we have a good report, so that if things do start to go right, where it's highlighted as an early stage, because of the complex nature of the way that the authority now has to function. So that's really what I wanted to say.
Thank you, Sue. Stephen, you said about there was something like 52 million from the pension scheme down, and you'd taken a snapshot and it meant that there was an £82,000 deficit. If we had one of our members who was just about to retire, would it affect his pension? No. Just checking for you, Tony. Want to make sure you get what you're entitled to.
John.
Yeah, really, I just want to add my thanks to the subcommittee, we've got Finance and Audit Committee, for all the work that they've done on this, because we set that up as a in-depth committee to have a real look at things properly, and it gives the rest of us members confidence, as well as from obviously the auditors as well, to know that our own members have been through it with a fine course. So thank you for them as well.
Yeah, I think you're right there, John. We've got a lot of expertise on this group of members, and they go into great detail, and it's definitely appreciated. Gillian.
Thank you. Can I just say that, thank you, John, for that a lot of the new members were not in place during this particular financial year. So we've had to rely hugely on sort of natural intelligence and common sense questions, but hugely on the management team and on the auditors. From my own point of view, this is a completely new organisation for me. This is a year I was not here. So thank you, Hazel. Thank you, Gavin, Tracy. We are relying on you completely, subject to common sense questions.
Has anybody else got any further questions for Gavin or Joanna? No? So we can move on to Gavin. Oh, sorry, Gavin. Back to you.
Thank you, Chair. So this second report that you have is the auditor's annual report. Received a draft of that report. And the reason it's a draft is we only issue that once we've actually issued our audit opinion, which we hope to see. I don't see anything getting in the way of that. Because I haven't thought about the other one. We will issue this report this afternoon as a final version. It sits there sort of complete. It's meant to be an outward-facing report for the public and stakeholders. It summarises the findings from the audit. The main thing that it does, in addition to the audit completion report, is to provide that commentary on value for money arrangements. So when we look at what we describe as value for money arrangements, and we talk about value for money, we're not giving it a conclusion or a view on whether the organisation provides value for money. We have to look at specific criteria that are set out in the guidance that's given to us, and the areas that we consider are financial sustainability, and that's where a lot of our focus is, particularly in recent years with all the pressures that the public sector is under. We look at the governance of an organisation, and we look at the final areas called improving economy, efficiency and effectiveness. And what that recognises is we consider not just financial performance, but operational performance. We look at how you work in partnership with other bodies, and we also look at your procurement arrangements as part of that review. So we haven't got we don't give a view or opinion or a conclusion. We report by exception. So if we identified a significant weakness in your arrangements, and we do identify these in other places, but we haven't here, we would report that significant weakness and we would make a recommendation in relation to it. I'm pleased to say we haven't had haven't identified a significant weakness. We haven't got any recommendations to make. Just a few comments on your arrangements. In terms of financial sustainability, it's clear that the authority faces a lot of financial pressures in common with most public sector entities. I suppose you've got the particular challenges of working with DEFRA, which sits within this regime, but seems to operate slightly different to the way local government sort of finances are organised. But for a start, they know how much they're going to get. Not long before you, but certainly before you have to set the budget, and that's not always been the case with the DEFRA funding. I think the view that we have is you do everything you possibly can given the challenges that you face. So clearly there's no weakness in your arrangements. You do the best you can. I think it's well managed. I think the authority is a well managed organisation. That's been my strong view since I sort of came here and saw what you did and the circumstances that you're working in. In terms of governance, I think you've got all the arrangements that we would expect to see for governance, and they work effectively. The Finance and Audit Group is a particularly effective group. I've sat on a lot of audit committees and they sort of vary in quality and challenge, but this is a good one. But it isn't a formal committee, and that's the one thing that we've highlighted in our report, is the expectation is that the government are going to make it a requirement to have a formal audit committee and also have at least one independent member on that audit committee. So that's just something that you need to think about as that gets turned from an idea into something that you have to practice. But you clearly have the foundations for an excellent committee. So that's required to be formalised. And in relation to the other area, I think you manage your operational performance as well as your financial performance really clearly and effectively. And we've seen that in the reports that we see coming through the authority and your sort of various structures. And in terms of partnership, it's really clear how effectively you work in partnership with other entities to gain the maximum benefit for the area. And it's a clean report, nothing to highlight. It's unfortunate that the last part of all of our reports is always the audit fees. So there is an additional audit fee, and that's in relation to the new standard IFRS 16 leases, the value of which is questionable. But it's there as a standard that you have to apply. It is extra work for you, it's extra work for us. I have to charge an additional fee for it because it isn't built into the base fee. I've taken the view that I just need to charge what for us is a very nominal fee. It might not seem like that to you. I've had to charge an additional £2,000 for that work. And that charge will be recurring. It will end up being put into the fee going. That's my final legacy here. So thank you. And finally, I am retiring in 5 weeks. It is 5 weeks today. I've been counting the days down for a long time. But it's getting very, very close. I'm really pleased to have been able to deliver this audit before I've gone. I wish I could say that everywhere I'm working, but I have got most of it done, or will. So they're going to be replaced. My replacement is actually a partner. I'm just an audit director. I'm being replaced by a partner, Mark Kirkham, who has a particular interest in national authorities. He's worked with a number in the past. So he was quite keen to be the engagement lead on your audit. Unfortunately, we're having to change the senior manager who we have on the audit because of maternity leave. So Joanne isn't going to be able to continue as audit manager within the sort of immediate year that's coming ahead. But we have identified another senior manager called Diane Harold, and she'll be taking over the audit. She's extremely experienced. So I think the prospects for your 25-6 audit are good, but there is a change in personnel. And keep saying finally, but really finally this time, I'd just like to wish everybody the best as individuals and the authority as it takes things forward. Clearly does important work, and I just wish you every success with it. So thank you.
Well, Gavin, thank you very much. I know you've been with us for a couple of years now and worked well with the team, and the team's appreciated. But yeah, I hope you do enjoy your retirement. And Joanne, congratulations, and yes, and enjoy your time off as much as you can. Is there any questions on the final report? Liz?
Thanks, Gavin and Joanne. I have a question really. It's to do with your footnote at the end of the report, where you talk about that the contents of the document is confidential. Now, I've come across this elsewhere, and it's a bit of a strange line, because obviously this is a public meeting. These are public documents. So I just wonder whether it's something that the organisation could look at, because it feels odd that we should have a confidential document that we're actually discussing in public. And I'll just raise it because I know it's caused problems elsewhere, and it's something I missed to pick up elsewhere. And I forgot to ask the speaker. It's a standard line. But
There's a standard thing on our reports, but this document, the auditor's annual report, is a public document. So we would expect it to be published.
it's just strange that that line is in there, because actually it is a public. It's never not going to be a public document, is it?
Yeah, the firm's very risk averse. So those these things in.
I know it's one of those things that's always been there, but maybe it's something you could take back and suggest that they might want to look at it, because it is, it's not appropriate, really, is it?
Yeah.
Okay. Any other questions? Yeah, questions? Great. So would you like to say anything before we move on to the proposal?
No, I'm happy to move the report and absolutely accepting the audit.
I'll read out the recommendations for proposal and seconder. I will say at this point, to the members of the public who do watch this, you know, we as members always praise what the finance team do so professionally, and like I say, the extra work that's been put onto them to get this audit complete. But I think it really alliterates what Gavin's just said from an independent person looking in and working with our team, how professional they are and how lucky we are having them. And just, yeah, so just thank you. So the recommendations are to approve. Are you happy taking these on block? Yes. Yeah. To approve the auditor's statement of accounts for 2024-25, Appendix 1 to Report 1, and authorise the Deputy Chair and the Chief Executive National Park Officer to sign off the accounts for issue, and endorse the findings in the audit completion report, Appendix 2 to Report 1, and the draft auditor's annual report, Appendix 3 to Report 1, for the year ending on the 31st of March 2025, from Mazars LLP. Could I have a proposer, please?
I'll propose that, Chairman.
Sue, and Alan, second. Great. All in favour? Yep, fabulous. Thank you very much. Next on the agenda is any urgent business, which I don't have any of. Is there any on the floor? No. So yes, thank you very much. And that's the end of today's meeting now. Gavin, once again, congratulations. Yeah. Yeah. I won't let them go yet.
Yeah, I'll end this stream if you just give me one moment, please.